choosing the appropriate price metric seems to be probably one of these game-changing moments for your business.
Coffee's for closers only.
So we've established my proposal is sound in principle. Now we're just haggling over price.
Let's see how much we're going for on eBay.
Man, it's the same as Dunkin' Donuts. Costs 15 times the price.
Today's podcast is sponsored by Jennings Executive Search. I had a great conversation with John Jennings about the skills needed in different pricing roles. He and I think a lot alike. If you're looking for a new pricing role, or if you're trying to hire just the right pricing person, I strongly suggest you reach out to Jennings Executive Search. They specialize in placing pricing people. Say that 3 times fast. Welcome to Impact Pricing, the podcast where we discuss pricing, value, and the profitable relationship between them. I'm Mark Stiving, and our guest today is Alessandro Monti, and here are 3 things you want to know about Alessandro before we start. He is professor and now dean at CBS International Business School in Germany. A long time ago, he was a consultant for SKP for 5 years. And believe it or not, he shook Bill Clinton's hand at a G7 in 1998. Welcome, Alessandro.
Hi, Mark. It's good to be back.
Good to have you back. So remind us, how'd you get into pricing?
The story basically goes that the first job after graduating brought me to SKP, and basically, once you start at such a powerhouse regarding pricing consultancy, you kind of never lose the interest and the passion on the topic, and since then, I went all in with pricing. So yeah, that's in a nutshell the story how I touch base with pricing.
How did you choose SKP coming out of school, though?
SKP was kind of a logical choice in the sense that I have a master's degree in economics, so it's a lot of microeconomics. So I learned all these pricing aspects from the economic side, supply and demand, markets, monopolies, et cetera, et cetera. And I was very fascinated that there was something like a pricing consultancy. So something that I knew from a theoretical perspective was then, used in real life projects. And that really was the game changer back then.
Nice. And I just have to ask, now that you have lived in the real world for a long time, do you believe in supply and demand?
I do.
Do you?
For many products, for many services, and for many market situations, I think supply and demand is still what drives markets and what then creates price. Price clears markets, and then price makes sure that we bring supply and demand into equilibrium. So yes, it is. We know now of advanced technologies that simulate, anticipate this, but at the end of the day, it's supply and demand. So yes, definitely.
Okay, just because I feel like it, I want to argue about this. May I?
Yeah, of course, sure. Let's do this.
So it feels to me like supply and demand makes all the sense in the world for an industry, but it feels like it makes almost no sense for a business. And so if we think about concepts of game theory and implicit collusion, and I'm not going to lower my price because I know you're going to lower your price and it's not going to change market share and all it does is hurt industry profits, then we tend to hold prices at points that are above where they would be if all we cared about was market clearing prices.
You have a point. You have definitely a point. So yes, for industries, segments, larger parts of markets, I would agree, definitely supply and demand. What then happens on the individual perspective, so on a business level, on a corporate level, this then may deviate. But you know what? The consolidated action of everybody within the industry, of all the businesses within the industry, then probably leads to these mechanisms that we know as supply and demand. So I would agree with you. We have to look specifically at what are we talking about? Markets, industries. Maybe digital is then different than the non-digital, and then offline and online. So But you know what we tend to see, and this was what really caught my interest. Taylor Swift, by the way, concerts, tickets, supply and demand. And I read an article that basically said, hey, Taylor Swift needs basically to increase the supply, of her performances, of her concerts to meet that demand, because otherwise, how things are right now, we will have these incredibly high prices and people complaining and then ending up buying these tickets anyway. So yeah, it's fascinating. So it really depends, as always in life. It depends on what perspective we're taking in and what type of market and business. Yes.
Yeah, I think that makes sense. And I think the highlight of this whole podcast is going to be you're fascinated with Taylor Swift.
Yeah, let's talk about that later. Probably it's a business case. Let me put it this way. No, it has stirred some controversies. So this is what I get, at least from the U.S. concerts.
Absolutely true. It's absolutely true. She is such a phenomenon. She is her own supply and she's her own industry, right? There is no doubt. Yeah. All right. So when I asked you what did you wanted to talk about today, you had brought up this concept of growth at any cost, and how do we move away from that? What are you thinking?
Yeah, this all stems from my observation that where we're going right now, since the maybe it's 2021, so the last 2 years probably. So the observation is basically where we're going is a state of consolidation, tough macroeconomic conditions for everybody. Money is not cheap, and this affects businesses across markets and countries and on the whole world. And while teaching also these kind of topics, I came across the fact how a whole industry, the digital industry, has been thinking about business and growth maybe is something that does not reflect our current tough macroeconomic conditions. So out of this basic observation, I thought that, we as, pricing enthusiasts, but everybody else that has a genuine interest in a profitable and sustainable growth probably is looking for, an alternative, probably is looking for other options on how to grow with business, on how to progress with his endeavor and her endeavor. So out of this observation, I thought, well, let's bring this down into something new, or an alternative concept, and that's what's really now driving my interest currently. Definitely.
So before you go further, first define digital industry for me. What are you thinking?
So I'm thinking on all companies that have a digital product / service, but have a digital asset that they want to sell to other interested market participants. So a digital product that, of course, we know has no marginal cost involved in that is easy to scale, that has the ability to be distributed at no cost. There's no rivalry in using this digital product because, for example, it is, embedded in a cloud. So everybody has access. It can be shared. So this is the digital industry. So you have a digital product with all these characteristics and implications.
Yeah. So just to make sure everybody's on the same page, you're talking about essentially software and data.
Correct.
Okay. Got it. So now let's hear, how are we going to get away from this growth at any cost mentality?
Yeah, I mean, I'm proposing a different narrative. I'm proposing that let's focus back on how we think about growth. Back then, I mean, since the 2008 years and money became cheap, you were a startup, you were a digital startup, you had an idea, and people were throwing money at you. And there was no alternative in investing because interest rates were low. Stock markets were doing like fantastic. And yeah, I mean, here's my money. You have an idea and grow. Grow in customers, grow in users, and make sure that you scale quick, fast, and we will not ask any questions. Just do it. This led to, I think, many businesses were funded, very mediocre businesses, to be honest. So that was,
Yeah.
but
what you're describing reminds me of pre-2008, when we would always hear about we're funding eyeballs, right? How many eyeballs can you get? And it had nothing to do with money or monetization.
Exactly. But I think this is kind of the pattern that I saw in these years as well, because the key to then scale. So the ultimate goal was, hey, let's grow, but growing in what? In numbers, in volume, in market share, in users, and all these, let's say, usage related metrics. And for that time it was okay, and everybody was happy, and you had your free offer, you had the signups, you were big enough, no questions, and that was it until things got a little bit rough in the last 2 years. And many players in the market were caught off guard because they did not earn any money, and were not earning money since many years. And what do? You tend to rely then back on what you learned back in business school: cost management. So fire the people, layoffs, downsize, and and it will be okay. But I think there is an alternative. The alternative being, let's redefine growth in the sense of, let's make profitable business. So let's grow, make sure that we have, the numbers, the signups, but seek profitability. Make sure that you grow your business and you grow your profit step by step. So don't overdo it. Have this as the ultimate goal, and everything else is then aligned towards this goal. And at the end of the day, we know these previous, let's say, growth motions as the PLG motions, the product-led growth. We have sales-led, we have product-led sales, but none of these have, growth as in profitability. And I think this, in our current times, is paramount. So that's why I'm proposing a different approach. It's the monetization-led growth.
So I find that interesting that you see it that way. As I've been studying the subscription business model, one of the metrics that they use all the time is LTV over CAC. So lifetime value divided by the customer acquisition cost. Now, the assumption is, we've got pretty close to zero marginal costs. But that metric is, if you think about it hard enough, it's really saying, how much do I want to grow versus how much profit do I want to make? Right? Because if I throw it all in CAC, if I throw all my profit in CAC, I end up with LTV over CAC equal to 1, essentially. Right? But if I throw all of my revenue into profit, so I don't invest back into the customer acquisition cost, then we're saying it's all profit. And so they're actually using that metric to balance growth versus profitability.
So that is true. We have seen similar KPIs. So the rule of 40 kind of tries to balance this off as well. And I'm not challenging these metrics. I'm more or less challenging the motion, the whole set of tools and techniques, to get to this ultimate goal of growth. And before that, those growth motions only had, as you just said, here and there a little bit of KPIs that indicated, okay, is this a profitable business or not? But the fact that we now need to embed this thinking into all parts of your business, into all parts of your startup, I think now this is paramount more than ever. And I think there's room for alternative concepts that will guide you now towards profitability. And if I may, let me give you an example. The PLG world, which I admire and respect. I mean, we have awesome, thought leaders and creators, but one of the main, pillars is the free. You need to bring in the product for free, eliminate the famous friction. So make it as easy as possible for the customer to onboard, to sign up, and basically they're saying, hey, you know what? Just use the product. Feel free to upgrade whenever you want. we got you covered in a way. But this has led probably to, many operators, many market players actually then neglecting, okay, so what's then? What's after the free? And this is not part of a monetization-led growth. I'm saying we don't need the free just for the sake of having free. There is the reason in having free, because there is value in having free users. You have network effects, you're profiting from them. But besides that, I think you need to seek, the conversion and the monetization as early as possible. So free trial is okay. Let them have 14 to 30 days, and then the product is awesome. The pricing is okay. It reflects the value. People convert, and you start earning money. So that's I think a fundamental difference. The free has misled many in the false beliefs, I think.
Yeah. So when you say free, you're talking about the freemium model versus the free trial model. And so people are using freemium. If they don't have a good upgrade path, they have no monetization path, right? They have no profitability there.
Exactly. So the freemium is good as always when there is value in having free users. So all the games, non-paying gamers and paying gamers, because you then have, the community and all this. I'm fine with that. But a B2B productivity SaaS, probably the network effects are not as that evident. So you are seeking what? You need the money. You need the funds. You need, to finance all the operations. And the free users, they're not paying, but they're costing you. All the support, all the tickets that these users are running. I mean, that's costly. If you don't have the infrastructure right away, that's problematic. So that's why I think the free trial may be the better option in some cases. Because, yes, I test, the product is awesome, so I have all the value drivers there in place. And then with the help of sound and smart monetization techniques, I then convert into a paying customer.
Yep.
And that's the point.
Yeah, I think that makes sense. And I liked one of the things you said a lot, and I wonder if that is the driving decision. So if I were trying to decide between freemium and a free trial, it almost feels like network effects is the thing that makes the difference between that decision.
I would agree. So when do we have value in having free users? So yes, they increase your network effects. They bring in data. For example, I'm looking at all the AI-based models. ChatGPT, of course, they need the free version because they need enough inquiries to learn, to adapt, to listen and then read, and in the data. So that's why they need also the free users. Yes. So whenever we have the data aspect, the virality aspect, the network effects, free is fine. And I'm not arguing this. But in all other instances, I think we need to be really careful in, just opening the funnel on top and bring everybody in for free. And then what? And then many stop there. And I think, we are ready for alternatives.
Yeah, I would absolutely agree that you can't offer a free product without a strategy to get to monetization, without a strategy to make money on it.
Yeah. Exactly. And that's kind of, the thought here in the monetization-led growth aspect. It starts right from the start. The product market fit, the very famous product market fit. And all the classic, let's say, narratives, there's hardly any space for pricing monetization. They are looking at product, at the UX, UI, it needs to be, the market, total addressable market, the TAM and all that. I have had trouble in discovering monetization aspects right there from the product market fit, which is, I think, a mistake. We need to include this right from the start. Otherwise, in my view, I don't have a product market fit. That's it. So it starts from there and goes up to what? Upselling techniques, into the real bundling techniques, into price levels, into price enforcement. Discounts, rebates, promos, et cetera, et cetera. So it's an alternative.
Yeah. I had Kyle Poyer on the podcast once, and he said the following words, and I've stolen them from him, but I just gave him credit. And that was, instead of product market fit, It really needs to be product market price fit.
Where do I have to sign?
Yeah.
Yeah, but you know what? We have taught, and I'm probably no exception. We have taught generations of young business leaders. We have taught them, hey, you need that product market fit and pricing, monetization. So all aspects of how can we earn money with this? We never taught these people, and I think it's about time. I think it's about time.
Yeah, I agree completely. So in a lot of ways, you could blame this on the investors, on the venture capital community, because they're saying, hey, here's what we want to measure. Here's how we're going to invest in companies. And I think as the investors become more savvy or they lose too many deals or lose too much money in the companies that don't succeed, they'll start to say, well, what are the types of companies that do succeed? And it's the ones that actually have that monetization strategy figured out.
Yeah, definitely. So, part of the blame, goes to the financial, say, community that has been, under, lots of problems lately. But this again reflects our current, very, very tough and critical times. But at a certain point, you came up with an idea. It was viral. It was a great product. It fit the narrative. We the latest trend, the whole Web3 and crypto trend, which now nobody's actually talking about. But if you were riding on this wave, and you had some first ideas on this, not even something like feasible to show. Hey, you had appointments with VCs, and that's I think something that we need to reverse. So back to basics, back to earning good money and delivering value, extract the counter value.
Yeah, it'll be interesting to watch how this falls out. And one of the things I find is that most companies don't even understand what value means. And so how is it that they're going to monetize a product if they don't know what their customers value?
So this is actually a philosophical question. We have seen actually lots of views and takes on value and how to extract this. My point is rather simple. I always bring up the case where you have on the one side of the equation the value. It's like a value bag. You fill it in with all types of drivers, of assets, of features. Can be the brand, can be the haptics, can be the design, the customer support, the service, whatever it is. Actually, sometimes even the smallest things can be of value to customers. So you fill in this value bag. And on the other side of the equation, you need the customer sacrifice. I'm calling it a customer sacrifice. Customers that value the other side of the equation, they're willing to pay to get to this value. So companies actually have to solve both sides of the equation. So what is it that we need to bring into the equation? What is it that we bring to the table? What are like the main value drivers, the main features? What are nice to have, things and then add-ons? And then the other side is this more the methodological side. Yeah. So what about willingness to pay? We know of methods, of course, we know them, and it's not easy. So it's something that you need to walk the extra mile, but then you will see the payoff in the long term.
Yeah, and I think a lot of those ways that we measure willingness to pay, those are aggregated, and they're not truly understanding what's driving the value. Because in truth, there's 100 different segments that we're serving, and 100 different people think something different is valuable to them. And if we truly understood it, we'd be segmenting better, smarter, creating better products, portfolios. So I'm with you.
Yeah, true. It's I think that's the key to success, especially now. Again, I cannot stress it enough. I see so many founders struggling, so many businesses, so many established businesses struggling. I mean, it's now again back to basics. So what is success? Success is, hey, I have something of value, and I'm earning money with this. So yeah, that's why I'm thinking about this alternative approach. So it's growth understood as in profitability using all of our modern monetization techniques. And there's room for alternative content.
Yeah, excellent. Alessandro, we're going to have to start to wrap this up, but let me ask the final question. What's your one piece of pricing advice that you would give our listeners that you think could have a big impact on their business?
Oh, wow. I think that probably now more than ever, choosing the appropriate price metric seems to be probably one of these game-changing moments for your businesses, especially as I see a lot of transitioning towards usage-based pricing and getting the metric there and like really like touchdown, like home run style. I think this is now the key to success, to get the right price metric that reflects the value that you're offering. So get the metric right. If you want something, the one and only thing right now, and I would say it's the metric. Get the metric right.
Yeah, that's absolutely true, especially true in digital businesses. But even in some more traditional physical or service-oriented businesses, the pricing metric, we've been creative and seen some pretty interesting pricing metrics coming in. So what would you advise companies about how to get the pricing metric right?
And interesting that you're asking this. I had a couple of weeks ago a nice project that tried to nail down this metric, let's say, question, and the key there was to try to find out how is usage happening among customers. So how is it used? What are the features that are used the most? And what drives then usage? So there was a company that more or less, is a platform, is a job portal, and brings, and matches. We had this supply and demand. So, job offerings and people looking for a job, and the metric was the match between employer and then people seeking jobs. And then the company said, okay, so then let's center around the match metric. So offering different bundles and packages, saying, oh, you have only 5 possibilities to match per month. Then you go like more medium. We have 15 until you go like, enterprise. We have unlimited matching, et cetera, et cetera. But that's actually the key. The job seeker looks for a job. I have a job. I'm looking for, talented people. The match is actually the results that brings both sides to the table, and they started with job postings, the more postings you have, etc. But it was the match. It was the match from the start. So to answer your question, have a look at usage. Have a look at how it is actually used, your product and your service. What is it that people really are looking into it? And this is then probably a nice proxy then for the real metric.
Yeah, I think that's a fabulous answer. And I coach every software company I deal with, especially if you're a SaaS-based especially if you're a cloud-based software company. And that is, are you measuring usage, right? You've got to monitor the usage of each individual feature, because that has so much insight into your pricing and packaging decisions. So fabulous. Alessandro, thank you so much for your time today. If anybody wants to contact you, how can they do that?
They can look me up on LinkedIn. That's probably the best way to get in touch, and happy to connect.
All right. And to our listeners, thank you for your time today. If you enjoyed this, would you please leave us a rating and a review? You can get the instructions by going to ratethispodcast.com/impact pricing. And finally, if you have any questions or comments about the podcast or pricing in general, feel free to email me, mark@impactpricing.com. Now, go make an impact. Thanks again to Jennings Executive Search for sponsoring our podcast. If you're looking to hire someone in pricing, I suggest you contact someone who knows pricing people. Contact Jennings Executive Search.